Hello everyone, this is the pre-market report video for today 31st December 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Just for info, NSE has over 350 indices and over 75% of the total ETF assets under management was part of this indices. And yesterday, not the Nifty or Bank Nifty, other than those two, there were some other NSE indices rebalancing, and in addition, some are going to be today. But I don't know which stock gets benefited in which index and which stock will have the outflow kind of information. However, for sure, yesterday, some of the NSE Nifty indices, not Nifty 50, some of the Nifty indices had their rebalancing. If required, please pause and have a look. Before yesterday, please look at the trade value. It was normal DIA trade value 8,000 to 12,000 crore rupees. Could be gross sales or could be gross purchase. But please look at the yesterday's value. Gross sales was roughly 41,800 crore rupees and gross purchase was roughly 39,600 crore rupees. But on the positive side, as a net, they bought for near 2,200 crore rupees. So this level of trade value 4 times increase only happens during the index rebalancing, and for sure not Nifty or Bank Nifty. If it is Nifty or Bank Nifty, at present almost every news websites will be publishing those, but it literally gone unnoticed. However, near the closing time, hedge fund called Nuvama Wealth released some major stocks fund inflow outflow details, but without explaining which index it's for. Anyway, as we discussed, the balancing is for yesterday as well as today. Basically, because of this rebalancing, NTPC expects to be the major beneficiary, $74 million US fund inflow. However, if we see NTPC price action yesterday, it didn't move much, so probably it might have rebalancing today. Whereas the other stocks did showed the rebalancing impact. PNB, IndusInd Bank, Federal Bank, Bank of Baroda, Adani Enterprise and ICICI Bank or were the other expected positive fund inflow stocks. On the other hand, SBI and HDFC Bank expects to have massive fund outflow, and in addition, Power Grid, Kotak Bank, BL, ONGC and Coal India or were the other negative stocks. Please remember, as we discussed earlier, part of the rebalancing was yesterday and part of them expects to have today. Anyway, now moving to the overall market. Yesterday early morning, Asian market was mixed. Despite that, Nifty traded positive for majority of the time, but in the afternoon, it started to move down. In our regular pre-market videos, lot of times we discussed this. Yesterday, drag down was a typical FII move. Again, it's visible in the trade value, and after slim trading for a week, now it back to normal. Contrary to DII, FII net sold for near 1,900 crore rupees. Regarding Nifty contribution, all the index heavyweight stocks, HDFC Bank, ICICI Bank, Reliance, Infosys and SBI all dragged it down. On the other hand, Minnow stocks provided some support. Here, regarding Adani Enterprise, in addition to the NSE fund inflow, they released a statement that their Navy Mumbai airport expects to inaugurate on April. So, Adani Enterprise share price increased over 7%. Sector-wise, 10 out of 13 major sectors were down, and overall in the listed stocks, 61% were down and only 35% increased. So, these were the quick takeaway from yesterday's Indian market. Then, coming to US market, fundamentally it was okay. Chicago PMI data was weaker and Goldman Sachs issued the statement that they are expecting a rate cut on March. But however, as we discussed yesterday, year-end profit booking and Trump rally profit booking both made the US market to close negative for the second day in a row. Dow Jones was down 0.97%, S&P 500 was down 1.07% and Nasdaq decreased 1.21%. In case of VIX, it increased 9% and moved near 17.5. About oil, there was a report released that diesel demand in Europe and US was increased due to holiday, so oil price increased consecutive days by 1%. At the time of this video, WTI crude trading $71 per barrel and Brent crude closed at around $74 per barrel. Regarding Indian ADR, as it is, IT stocks crashed, Infosys down near 2% and Wipro was down 3%. However, if we calculate the arbitrage difference, it's indicating a mild negative. And same for both banking stocks. Here, one important thing to notice, yesterday in US, there was a negotiation within their committee regarding the regulation of H1B1 visa and its related cost. Generally, this will increase the IT company employee cost. Hence, maybe more development on this side might potentially influence the stocks today. Anyway, overall, as it is, ADR looks scary, but if you see the arbitrage is an indication of flat to negative opening. Then about GIFT Nifty, in line with the US market negativity, it dropped significantly and early morning today it traded at 23,686, equating that with the spot market indicating over 70 points gap down opening. So as a summary, yesterday the global momentum was slightly negative. Today it's even more negative. So GIFT Nifty, Indian ADR all indicating the gap down opening. Furthermore, if you see the derivative market open interest, in the future index market, FII increased their short position to 86% and proprietary traders also increased their short position to 61%, which is not good. And if you see the option index open interest, the status was even scarier. Over 12.5% of the retail traders open interest makes money if the market goes up means. And on the contrary, near 4% for FII and 6% for proprietary traders, more open interest will make money if market goes down. So I'm not seeing any market upside indication from this open interest position, but as always, expect the unexpected since near 80% of the index option volume was unwounded last week, out of which only 30% new position added now. So proprietary traders got more margin money in their pocket, which they will deploy anytime and might change their stance. Regarding stock open interest, Torrent Pharma, D-Mart, Indian Bank, IRFC and PFC got an increased open interest along with a negative close, indicates the short build-up. On the other hand, Nowcree, India Hotel, Zomato, AU Small Finance Bank and JSW Energy got an increase in open interest with a positive price close, which means these stocks got the long build up. Then about the things to look out, before the market opening, Chinese PMI data is due. Then in the aftermarket hours for US, their S&P housing price index are some of the things we need to keep an eye out today. For India, I'm not sure, maybe infrastructure growth rate might be due. Coming to technical, Nifty opened 20 points gap down but recovered to 23,900. However, in the afternoon, it failed to sustain those gains and closed at 23,645. Thus, on the daily chart, Nifty formed a bearish candlestick pattern with an upper shadow and with above average volume. So 2 days in a row with significant upper shadow indicating the sustaining selling pressure, and also for 4th session in a row it closed below 200-day exponential moving average 23,700. In addition, it trades below all key moving averages, altogether indicating deepening weakness. Hence, if Nifty sustains below 23,700, then the first downside target would be 23,500, followed by 23,263, the November low, which possibly might act as the crucial support level. In the event of a rebound, 23,900 to 24,000 will act as the key resistance level. Then for Bank Nifty, it opened 60 points gap down, then broke below 15,000 mark and closed below the same. Thus, on the daily chart, Bank Nifty formed a bearish candlestick pattern with a long upper shadow and small lower shadow, indicating the lack of strength at higher level. Bank Nifty touched its 10, 20, 50 and 100-day exponential moving average intraday but failed to close above them, even though it reversed from the trendline support and defended its 200-day simple moving average 50,600 as well as its 200-day exponential moving average 50,472. So on the upside, the 50-day exponential moving average at 51,960 will act as a resistance, while in the short term, Bank Nifty is expected to trade within the 50,500 to 52,000 range. Regarding the options front, the maximum call option open interest was at 24,500 strike, followed by 24,000 and 23,800, with maximum new call option writing at 24,000 strike and then 23,800 and 24,300. On the put side, the maximum open interest was at 23,000 strike, followed by 23,200 and 23,500, with maximum new put option writing at 23,200 strike, followed by 23,000 and 23,050. Thus, from options data, Nifty might remain in the range of 23,500 to 24,000 in the short term. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI research advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.